What's up guys, I hope you guys are having a great day. Today we're looking into AMD and we're going to be doing a comparable analysis and we'll see if it is attractive with the current valuation relative to its main competitors. So let's start with the profitability analysis. If we look at the revenue growth for the 3-year compounded annual growth rate, we can see that AMD and Nvidia are growing pretty fast. Their sales are growing fast, whereas Intel is lagging behind. Just as a reminder, Nvidia is a pretty big market cap compared to the other two, and yeah, Nvidia is going pretty fast, but AMD is just like really killing it right now. If we look now at the operating margin growth for the profitability, we can see that AMD is just like crushing it by far comparing to the other two, and in fact here Intel is even declining in profitability. And now if we look at the operating cash flow growth, once again, AMD is literally killing it with 92.6%. Guys, this is like incredible growth. And yeah, that's just huge. Nvidia here is also respectable with almost 16%, which is pretty good also. And keep in mind that Nvidia has a market cap of $645 billion. So this is still a big company. And the fact that they're managing to bring these big numbers of growth is still impressive. So we'll give that to Nvidia. AMD still has a lower market cap. We see $151 billion, but still like these growth rates are just like incredible. If we just look quickly for the net profit margin here, we see that Nvidia and Intel have a pretty decent net profit margin of around 26-25%. AMD is lagging behind, but with the speed and like that at this rate of growth that we're seeing right now, I wouldn't be surprised that it would reach the same level as Nvidia and Intel like in the next coming years. So I'm not worried at all about that. So for the profitability, AMD is literally growing like super fast compared to the other two. Nvidia is pretty good also, like respectable growth rates, and Intel is just lagging on the growth. It's stagnating and even decreasing on the profitability. If we now look for the capital structure analysis, as you guys remember, current ratio is current asset on current liabilities, which tells us if the company has enough short-term assets to answer or to pay for the short-term liabilities that they're gonna have. Okay, and here there is no single good result. It's depending on the industry and the competitors. So here we can see that Nvidia is really comfortable with a 4.09. AMD and Intel are at around 2, which are great also. The general rule is once you're above 1, it's okay, it's good enough. But once you're like for here, like we said, it's 2, so it's good. And Nvidia, it doesn't mean that Nvidia is better than AMD and Intel on the current ratio. It just means that currently they have a lot of current assets compared to their current liabilities, and this could be also a negative thing if they're just not using their assets efficiently, and we're going to talk about that later on, the productivity. The debt to equity ratio just tells about the amount of debt the company has relative to their equity. So we can see that they're all in the around 0.7 as a ratio, so they're all there's no really a big outcast in any of these. For the third point, something I want to point out here really quickly is that if we look at the cash and cash equivalents versus the total debt, we can see that AMD has literally no debt. Okay, $313 million of debt. This is current and long-term debt together. This is nothing. So AMD is basically like almost unlevered at this point. This is also an indicator, because when a company doesn't have too much debt, that means that if the company starts to use debt, it can potentially help it grow even faster. Okay, using debt helps companies to grow faster, and in the case of AMD, it still has that option. So this is really good to see. And if you add the fact that it's currently sitting on $2.5 billion of cash, they can, first of all, they can repay all their debt like right away if they want to, and they're in no financial distress whatsoever in their current state. Now if we jump to the shares outstanding, this is the evolution over the last 5 years. we can see that Nvidia and AMD have been diluting a little bit of their shares, but it's nothing really alarming, especially knowing how fast these companies are growing, as we saw earlier, especially AMD. And Intel is buying back shares, so this is helping bring more value to the shares. And as you guys know, when a company issues more shares, it dilutes the shares for the current holders, meaning it loses value of the shares that they currently have. But nothing really alarming in this section. If we look at the management efficiency, I like to use the asset turnover ratio, which basically is revenue on average total assets. And what this tells us is for every dollar of total asset, how much money is the company generating in revenue. So here, for example, Nvidia is generating 66 cents for every dollar of asset. And if we compare this to AMD and Intel, we can see that Nvidia is not using its asset really productively as it could be. So this is interesting. Whereas Intel is really being efficient into how they use their assets to generate revenue. AMD is a little bit in between both of the two, but if we compare these two together, Nvidia and AMD, because they're both like the growth stocks that we've been seeing about between the three of them, we can see that AMD is really more efficient in how they use their assets in generating sales than Nvidia. Now, if we jump to the valuation, taking all of what we said into account, the price to free cash flow here, for Intel, it's 21, 46 for AMD, and 90 for Nvidia. Intel doesn't have a price to free cash flow really expensive. This is also reflected by the fact that there isn't any growth. As we saw earlier here, there's not a lot of growth going on, and with Intel, even some declining in profitability compared to these two. Okay, so this is normal. When a company isn't growing so really fast, you're not ready to pay a big price for them. But the more a company grows fast, the more people are ready to pay a bigger price for it. This is just how it works. And in the case of Nvidia and AMD, I would say that Nvidia is, well, it's the double the price to free cash flow as AMD, whereas AMD is growing like faster than Nvidia, just like we saw earlier. So I would be tempted to say that Nvidia might be a little overvalued and AMD would look more attractive than Nvidia. Alright guys, just keep in mind, like we said earlier, Nvidia has a way bigger market cap than AMD and Intel. Just like we can see here, it's at $645 billion, whereas the other two are around 150 and 200 billion, okay? And if we compare this to the amount of revenue they're all generating, Nvidia is generating currently 1.47 times higher revenues than AMD, even though Nvidia is, 4 times bigger than AMD as a company market cap. Like we saw earlier, Intel is not growing that much. It's more of an established company. That's also one of the reasons why they're giving a dividend. They have a dividend yield. Yeah, it's making cash and they're just giving money to dividends. But it's a less growing company. Like, it doesn't grow as fast as these two. Second key point is that AMD, like we saw earlier here, it has a lower net profit margins of 19% against 26% for Nvidia. But AMD has higher growth on its operating margins, like we saw earlier here, that it has a 63.5 operating margin growth, whereas the profitability of Nvidia, it is growing but very slowly compared to AMD. So this is also to keep in mind. AMD and Nvidia both have a good asset to liability ratio. AMD has barely any debt, just like we saw. So yes, it is potentially under levered, which gives possibility to using that debt. That could be to either finance new projects, really anything that could generate further growth for the company. So this is still something good. And remember guys, if a company doesn't have any debt, first of all, you can't go bankrupt if you don't have any debt, and yeah, you just have that option that you can use it. Anyways, I'm rambling a little. The second point here is that AMD has been, yes, it's been diluting a little bit, but like we said, it's not really alarming, especially since it's in its growth phase, and only 5% over the 5 years. Like we saw, it's not really on the red flag or anything. So things to look for, guys. So just like you guys know, AMD acquired Xilinx recently. It has been confirmed, and obviously this is going to generate dilution of shares since the purchase of Xilinx was in stocks, made with stocks. So this is going to dilute the shares for AMD, that's for sure. But the good part is that the acquisition will boost AMD's growth even further because there's going to be synergies in it, in this acquisition. And overall, even though it dilutes the shares, in the long term it will help the growth. And like we saw, like AMD's growth is just like huge right now, so this acquisition is going to really help it out to like even skyrocket and like break this competition that we're seeing between the three big players. So that was it, guys, for AMD. I hope you guys liked it, and I will see you on the next video. Please don't forget to leave a like, it really helps, and leave a comment, subscribe. Thank you, guys. I'll see you on the next one.